And welcome to this webinar. I hope everyone is doing well. My name is Theo and I'm here to introduce you to the host, Mr. Paul, and then I will leave you. So I'm just organizing the screen here. So everyone is able, I think you're watching now my screen. Yep, that's right. So guys, please make sure you subscribe on the YouTube channel and enable the notification buttons, because every time we go live or we upload webinars, you're going to find them here at the Trading Spotlight or at the live events, live trading. So for those who want to watch the previous webinars by Paul, please refer to Trading Spotlight and you're going to find everything there. And if you find valuable the content we bring out to you, of course, we'll appreciate to give us a thumbs up and like the videos. Next, I would like to introduce you, if you haven't followed yet, the Admirals Global Instagram page. We put many real stories, content on a daily basis, on weekly basis. Of course, every single day you're going to get informed by something. And the last one, the Telegram channel. It's a brilliant way of communication. So please make sure you follow. I don't know why you cannot see it. It says that I have to download it, but until now, everything was working. I think that's better. So here's the Telegram channel, and yep, that's the same code. Without saying anything more, I would like to introduce you to the one and only Mr. Paul. Hello, Paul. How are you?
Good afternoon, Theo. I'm very well, thank you, and Happy New Year to you.
Yep, thank you. Happy New Year. Happy New Year.
Thank you.
So, how is trading going? Exciting days ahead in the market, huh?
Yeah. I think 2023 is going to be an exciting year for traders. I think there's going to be plenty of opportunity for us. So I'm all ready to make the most of it.
Yeah, can't wait for that. So I think you're able to share your screen. Just double check when you're ready.
Hopefully that's excellent. Hopefully that's come
okay.
up. Hopefully everyone can see and hear me. Excellent. All right. Welcome everybody. Good afternoon. And as I said to Theo, a Happy New Year to you wherever you are in the world. Myself and everyone here at Admirals, we hope that you're well, hope that you've enjoyed a little bit of a festive break and that you're ready for what will be undoubtedly an eventful 2023. I think that there's going to be a good bit of volatility in markets this year, and of course that will bring opportunities if you are properly educated, which of course is the reason for all of these particular sessions here at Admirals, where we're hoping to sort of pass on our own insight and knowledge and education to you in an effort to help you be the best traders that you possibly can be. So today's session in our price action guide, up to session 15 already. Well, here we are at the start of the year. So what I'm going to do is I'm going to talk about building a price action trade plan. We're going to sort of just find the focus, all right, in what we have covered so far, and start to draw it together into a simple plan that can become a routine that can be built out from a checklist, all of elements which we've talked about so far, so that we're in a good place, all right, to set ourselves off to start the year on the right foot with the kind of right routines for us to, as I said, to allow us to be the best traders we possibly can be. So Without further ado, we'll switch on and look at the slides that we have here, okay? And as always, if you've got any comments or questions, you can put them into the chat box, all right? If you've got any thoughts, or maybe you've got your own views, all right, on terms of what you think markets will be like for this coming year, or how you like to plan yourself, okay? Very happy to hear that. I think everything adds to making it a more engaging and interesting session. So for those of you joining us the first time, we're Admirals, a Forex and CFD broker with over 8,000 financial instruments, providing global presence with local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you to engage with markets using both the MT4, MT5 and Admirals Supreme Edition. Any questions about Admirals, please get in touch with your account representative and they'll be very happy to help guide you. So what we're going to talk about, well, not unsurprisingly, this is the Wednesday afternoon guide about price action trading. So for those of you who are joining us for the first time or you're new to trading, very quick 1 or 2 slides on what is price action trading and how it can help a new trader. But what we're going to talk about today in terms of our, let's say, our main thrust is that, why is having a trading plan for a price action trader important? What's important for us to consider, all right, in such a trading plan. And of course, at the end of the time, what we'll do is we'll have a little look at the live markets. It's important in terms of, a trading plan is just, we're going to focus more on the sort of kind of tactical side, and we won't be able to cover every aspect of it today, but hopefully what we'll do is we'll start to get a routine, okay, routine that will build up into a plan, which over the sessions for the coming year, we'll just actually develop and evolve as we grow and in terms of our knowledge and understanding of how to engage with markets using price action. It would be interesting to know, those of you joining us here today, all right, how many of you are utilizing price action in your own trading at the moment, and how many of you have a trading plan, if you have one, or if you've created a new one for this year, or you can be honest and say, no, you never created one, never thought you needed one. That's absolutely fine. That's what this session is here for today, all right, to just help you, as I say, bring a little bit of focus, all right, to your work as a trader, allowing you the opportunity to be the best trader you possibly can be. So, for those who don't know me, my name's Paul. I've traded for many years, traded for funds, for clients, all right. Primarily, my own focus tends to be on FX, indices, and commodities. I tend to be a trend trader for sort of swing and longer term position trading, and I tend to be a mean reversion and reversal trader for my intraday trading, all right? All elements of which will come into our discussions as we go through looking at and trading markets through the prism of price action. So today we're going to just continue that series based on basically helping traders understand and utilize price action in their own trading. And the reason being is that sometimes it's very easy for complete beginners to be perhaps maybe a little bit intimidated by the amount of knowledge that's required to be able to analyze and engage with markets. However, with some education from these Admirals webinars and a little bit of understanding of candlesticks and price action, it becomes easier to analyze and understand markets by just keeping it very simple. So what we're going to be doing is each Wednesday, we'll build upon the previous session so that you're educated and informed how to utilize price action in your own trading. So as I said, it'd be interesting to know, those of you joining us, how many of you are already using price action in your own trading? How many of you are, completely new trading and you don't really fully understand it? That is absolutely fine. That's what these sessions are for. I fully understand that we have a broad range of experience of people who join us for our sessions, complete beginners to sort of experienced intermediate traders. You're all welcome here. There'll be something for everybody to take away and learn from. As I said, I'm very happy to answer questions and share my experiences and thoughts. And at the end of each session, you'll find there's a very quick feedback form. By all means, please put that down there. Or if you're watching this later on the Admirals YouTube webinar archive, if you've got questions or comments or things you'd like us to see in future sessions, don't be afraid to put them down, okay? That helps us. We want to make these sessions as useful as we possibly can for you. So we'll happily sort of, take any thoughts or feedback you might have. So for those of you who are completely new to trading and trying to still understand, well, what is price action, Paul? All price action is just a basic, simple means of market analysis using price movement over time. It's popular with both retail and institutional traders. You'll find there's lots of eyes looking at markets through the prism of price action. And as the name implies, we're analysing the change in price over time. That is the action that we're looking to work at. What you will find for most of our sessions is that I will be typically focusing on longer term price action over the last 3, 6 months, maybe even 12 to 24 months. And the reason just simply is that, I recognize that people joining our sessions, generally, they are mostly part-time traders, all right? They are trading around a job or other lifestyle commitments, etc., maybe trading around study. So, they might not necessarily be doing intraday trading all day, but what they might want to be able to do is to basically be able to put on a couple of positions through weekend analysis or just on a daily basis and be able to let those trades play out. And so that's where we'll focus. But what I'm very keen to stress is, and those of you who know me will know this, is that whatever concepts or ideas I share with you, I always want them to be time frame and instrument agnostic. I want them to be able to work on any time frame and work on any instrument, because I recognize that people joining us here for our sessions, some people will be happily trading monthly charts on platinum. Other people will be trading 5-minute charts on Bitcoin. Okay, I recognize there's a broad spread. So, but what I'm sharing with you is these concepts. They are, as I say, time frame and instrument agnostic. They will work better on some over others, but as a general rule, if you can able to apply good price action sort of concepts to your trading, that's a skill set that will stand you in good stead throughout the entirety of your trading career. So, what have we covered so far? Well, we've covered quite a lot, and basically what I want to do is to get across is that, covering both a series of hard and soft topics, admittedly by my own definition. I would look at that in terms of price action. Hard topics are, you're looking at really technical aspects of trading markets through the prism of charts and technical analysis and price. So, that's why we've done lots of sessions on setups, as you can see there, like engulfing candles, star formations, key reversals, pin bars, etc., inside bars. So we've covered lots of very simple price action setups that form the core of a price action trading methodology. But equally, what we've also done is there's put in a few of the let's call them like sort of the soft skills that perhaps new traders don't fully grasp or understand their importance, but those of you who've traded for a while will realize that these things become unbelievably important. So things like being able to identify your trends, okay, preparing yourself for opportunities in the markets, managing risk, okay, crucially, building trading plans, managing your trades, using checklists in your trading. Last session of the last year, we looked at how to review your trading from the year before in order to improve your trading this year. And today we're going to talk about building out a price action trading plan, a simple routine that we can utilize, all right, to help us make sure that we're doing the right things day after day after day. So let's kick into it. Those of you who've joined us through this series, we've talked, as I said, through a lot of hard and soft topics, and I've talked a lot about particular setups. But what, as I said, I wanted to do is, this is the first session we're doing in 2023. I want to utilize it as let's call it like a marker. We're putting down a marker today. We want a routine, okay? We want a plan that we can follow that is very simple, that is very easy to utilize and work with. So, here we go, all right? So, 10 steps, okay? We'll look at a few of them, all right? Today, we're not going to cover all of them today. You'll have to come back for the future sessions to cover some of the elements. But it's more about, as I said, a price action trading plan. So, what I talk about is, you'll hear me talk about very simply is about just having a simple routine. We did those sessions there. They are all on the Admirals webinar archive. If you're joining us for the first time, please, by all means, kick into those and have a little look. There's lots in there. But, what I want is for you to have a simple price action trading plan. So whenever you open a chart, doesn't matter what it is, all right, whether it's gold, whether it's euro against dollar, whether it's Bitcoin, all right, whether it's platinum, it doesn't really matter. Okay, this is what you should be doing. This, as I said, this is about giving you focus, all right, as a price action trader. First one you should always be doing is defining levels of support and resistance on your charts. Start with the monthly, go down to the weekly, to the daily. We'll look at it a little bit more in detail in a moment. But we want to draw in those levels, which we'll talk about in a couple of slides' time. Step 2, I want to define is there a trend in place? If there is a trend in place, I want to trade with it. All right, I want to fight it. All right. What we have to recognize, though, is that markets only trend 20 to 30% of the time. An awful lot of the time they are consolidating, all right, or they're in transition, in which case, unless you're an experienced trader who can trade reversals, well, then I suggest that, you just ignore and go and look for markets that are trending. If we have markets that are trending well, we're looking at what step 3 is, okay? We want to see how does price react at key support and resistance levels. Those support and resistance levels can be static ones, like horizontal levels of support resistance we've drawn on at step 1. They might be big round numbers, okay, big psychological numbers that are of importance to that market, or it might be dynamic levels of support resistance. Maybe it's like a trend line or a particular moving average. What we're looking to do here is that, if we are in a trend, if we're in an uptrend, we want to be looking for opportunities to buy on a pullback. If we're in a downtrend, well, we want to be looking at opportunities to sell into rallies. Okay, very, very simple trading, trend trading using price action. That's what we're looking to try and achieve. So, we're looking for step 4 is, looking for price action triggers, all right, at those support and resistance levels where we've identified particular areas where the market is, it's likely to do some business. What we're looking for is particular price action triggers, things that we've talked about before, things like pin bars, engulfing candles, key reversal candles, inside bars, star formations. If you have an understanding of those simple triggers, that is what can actually just, help us just define and build a simple plan. And step 5 is it part of a bigger chart pattern? Is it part of a bigger continuation pattern? So something like maybe a triangle or a flag, or is there actually something like a reversal pattern that is setting up, something like a head and shoulders or a double top or a triple top? Okay, so all of which we will do, in a session in the future. So there's a very simple 5 steps, okay, that you can use to start just putting into plan a very simple price action trading plan, right? There will be elements that you have to clarify and clear up, but if you're doing these 5 things, right, you're starting to do the right thing, the right routines, okay, best practice day after day after day. That is what will help you become the best trader you possibly can be. On the flip side of that, okay, the what I like to call the back 5, all right, okay, the 5 R's, all right, step 6 to step 10 in terms of a price action trading plan. Step 6 is your risk, all right, your risk management. You always define your risk, you accept it, and you stick to it, okay. You never trade without a stop loss. You never trade more than a small portion of your account on any particular trade. Flip side of that, step 7, reward. Okay, am I using a target that I'm aiming for, or am I having a trailing stop that will hopefully help me, ride that trend as long as possible? The important thing is to know your exit, all right? You choose which one you do. Are you going to use a target or are you going to use a trailing stop? Know your exit before the trade goes on. You don't want to be changing halfway through a trade. Step 8 is records, all right? Keep scrupulous records of all your trades. This is one of the things that will help you improve as a trader. As I said, these are the kind of soft skills that new traders just think, they don't recognize or understand the importance of. But those of you who've been trading for a while, right, will recognize these are the things that help keep getting you better and help you sort of become the best trader you possibly can be. Step 9 is review, right? Improve your own trading performance by debriefing your trades. You debrief your trades every day, every week, every month, every quarter. All right, you have a commitment to being the best trader you possibly can be, and the way you do that is by reviewing your trading performance. And then the final of the back 5 R's is the repeat, namely, by keeping good records and reviewing, you start to recognize what works for you and what doesn't work for you. And quite simply, you repeat the trades that work well for you, and you cut out the silly, impulsive, knee-jerk trades, all right, that don't work for you. This is all about you becoming consistent and disciplined in your trading. It's hard to be consistent without being disciplined. It's hard to be disciplined without being consistent. They basically help each other. And it's that consistency and discipline that is key. So I've very quickly gone through 10 steps there, all right, that make up a very simple price action trading plan. There's more to these elements, but, if you're effectively, remember we talked about in previous sessions about using checklists, about utilizing routines. you start doing these and adding them in, this is the sort of stuff that makes you sort of, operate as the best trader you possibly can be. And make sure you're doing the right things rather than either A, over trading, right, being just following the market, chasing the market, or actually just missing things, making silly mistakes, okay, because you've missed things, you've forgotten to do things, all right? And that's, those are the sort of things that can come back and bite you in the backside if you're not careful. So with that in mind, we also need to sort of look at, well, what are we gonna look at here? What are we of interest to in terms of our trading and using technical analysis? So what we're gonna you'll see me sort of focus on over these sessions is just looking at these particular instruments. So when it comes to FX, all right, foreign exchange, which is FX indices, commodities are my favorites. You'll find me basically focusing on 28 of the major pairs and the dollar index. Right, dollar index gives me just an overview of the what the dollar's doing. That can give me a sort of a sign of whether that's trendy, whether it's asleep, whether it's volatile, etc. Just that'll help me. And then I'm looking at the sterling pairs. Pound against dollar, pound against yen, pound against Swiss franc, pound against Aussie, pound against Canadian dollar, pound against Kiwi dollar. The euro pairs, you're a sterling, you're a dollar, you're a yen, you're a Swiss franc, you're a Aussie, you're a CAD, you're a Kiwi. And then the others, dollar Swiss, dollar yen, Swiss yen, Aussie dollar, Aussie yen, Aussie Swiss, Aussie Canadian, dollar CAD, dollar yen, Canadian Swiss franc, Kiwi dollar against US dollar, Kiwi dollar against Japanese yen, Kiwi against the CAD, Kiwi against the Swiss franc. Those would be my core, all right, for longer term sort of swing and position trades. Those of you who will understand trading will recognize that, that's pretty much the dollar, the US dollar and the other majors. That gives you the kind of 8 major FX pairs and the relationship between them. And, in my kind of more, let's say, advanced style of trading, that the relationship between those is what helps me as well. But for us, that's what we're going to look at in terms of FX pairs. That's what we'll focus. I don't mind looking at other FX. There's lots of exotic FX pairs out there, and we can have a look at there if there's something of interest. But this is, let's say, our core as part of our trade plan, where we're going to focus our time, effort, and resources. We'll also look at indices, so the major American ones here that are available on Admirals. So we've got S&P 500, the Dow Jones, okay, NASDAQ 100. In the UK, they've got the FTSE 100. In Germany, you've got the DAX 40, Japanese Nikkei, and also the Australian as well, okay, the Australian 200 index as well. There are other indexes that we could add in, Hong Kong, etc. In there, there's Swiss, there's lots of other indexes in there that maybe might be of more relevance to you based on where you're dialing in from around the world. That's absolutely fine, no problem at all. Just this is a core, this is our core elements that we're looking at. In terms of commodities, oil, both in terms of Brent and WTI West Texas, gold, silver, also energy in terms of natural gas, all right, but also some of the other more interesting metals, okay, in terms of palladium, platinum, copper, etc. So all of which there, those are available through the Admirals platforms on both MT4 and MT5. I don't consider myself an equities specialist, okay, certainly in terms of fundamental understanding of the equities, but I'm a trader and I can look at the charts and we will look at the FANGs were the sort of, let's say, the very popular tech stocks, okay, for a few years. In many ways they were very popular last year just because we were shorting them rather than people being buying into them. So Facebook, Amazon, Apple, Netflix, Google, okay, and there's a few other personal favorites which I'll share and show with you. But then also equally, I recognize there's some people who are interested in crypto, so things like Bitcoin, Ethereum, all right, Litecoin, XRP, and stuff. Those are available from the Admirals platform, and we will have them in. So, as I said, there's a little, let's say, a core range of instruments that we can look at. Now, some people will have been looking at that, thinking, there's far too many, there's far too much for me to focus on. And that's absolutely fine, ladies and gentlemen. That's absolutely fine, right? What you might find is that you might actually find that 1, 2, maybe half a dozen is about enough for you. That's absolutely fine. I'm not particularly insisting you have to literally trade all of them. But, you know, I do it as part of my, let's say, my day job as a fund manager, okay, keeping on top of them because it's my day job, all right? And so, you know, being able to keep on top and draw through them and write through them and what have you and understand them is, you know, is part of what I do. But it is also it's part of that routine. All right, part of that routine, okay, building those routines of going through, just keeping on top of what's actually occurring, what's happening, and then with that sort of, you know, utilizing that to employ those simple 10 steps that we had, you know, to look at, as I said, it doesn't really matter what asset class, you know, you're looking to trade at, whether it be FX, whether it be equity indices, whether equities themselves, commodities, cryptos. If you're doing these, you know, those 10 steps correctly, it's ensuring that you're doing the right thing time after time after time, and that's you know, that's what we want to focus on, ladies and gentlemen. So with that in mind, I said we'd do a couple of slides on terms of, you know, just the first couple of steps, just to, you know, just to flesh out a little bit around regarding our price action trading plan. Remember what I said, step one, define levels of support and resistance. So whenever you open a chart, all right, whenever you open a chart, as I said, it doesn't matter what, it doesn't matter, even if you particularly want to focus on trading, you know, 5-minute charts of gold, okay? This is what you should be doing anyway, all right? I appreciate that some people like to focus on supply and demand, some people will like to focus on market structure, etc. You know, that's absolutely fine, but I genuinely do believe, having, you know, worked in markets for years, is that just define levels of support resistance, all right? Markets recognize and remember those major levels of support resistance. So look at the monthly chart, draw on those particular levels of support and resistance, look at the weekly, look at the daily, and draw in those levels. You can also add in big round numbers, big psychological numbers, you know, 120, 140, you know, pound against US dollar cable has been around, you know, 120, okay, the last month or two. Euro against US dollar, okay, you know, was pivoting around the parity number, okay, of 1. Dollar against Swiss franc, parity number there, as Ken has been pivoting around there. Dollar against Japanese yen is sat around just above the 130 level. Those big round numbers, okay, they do become important, all right, when you're looking at the big picture. So being able to draw in relevant ones is absolutely fine. If you're struggling, okay, well then what I can suggest is you can use the fractal indicator, which I'll show you later, and we'll do a session on fractals itself as a way, and it means just to maybe help draw inexperienced eyes to identify particular levels where price might actually sort of be reacting, and that's what we're looking for. We're interested in what I would determine as inflection points, all right? The points, you know, price at time where the market is going to have to make a decision. Market's going to make a decision. Is it going to continue in its existing trend? Is it going to reverse? Is it just going to consolidate? Because it's those particular areas and zones that I'm interested in starting to look at, you know, where I can actually engage with the market and do my own business and take my trades, which will become more apparent as we go through these series. So step one, remember what I'm saying, draw on levels of support resistance, all right? You don't want to be selling into support or buying into resistance, all right? And new traders easily do it because they don't really follow those kind of simple plans. Second one is, step two is define if there is a trend. Remember what I said earlier, and I've said it many times when delivering these webinars, namely that a good trend will leap off the chart at you. Right, you don't need to force it. Don't force it at all. If you find yourself forcing it or struggling to identify if that instrument is in a trend on that particular time frame, the reality is it probably isn't. All right, good trends leap off the chart at you. Remember what I said earlier is that markets, they only trend for maybe 20-30% of the time. A lot of the time they are just consolidating, or they're going sideways, or they're just in a very wide range. And I'm not to say that those are not tradable. There are lots of people who like to trade ranges, all right? But I just, for our purposes here, what we're looking to do is preferably sort of just try and trade trends, all right? So it's important that we find them, but it's important equally that we don't force it, all right? What you find in trading is that, whenever you force anything in trading, it rarely works well, all right? It rarely works well. Trading is partly about becoming grounded, becoming just in your own flow, in your own zone, and working with that and working with the market's flow as well, all right? Trying to fight the market, trying to force the market, I can assure you, ladies and gentlemen, it rarely ends well, all right? So good trends leap off the chart, you don't force it, let it come to you. This is I mean, it's a bit of an old example, but it doesn't matter, because what we want is simple clarity. That's a weekly chart of the DAX. You can see on the bottom left, price was just going sideways there. It was just consolidating there above the averages, but it was consolidating. Then it breaks out. And then we actually see is, price is in a very lovely trend. It's sitting above its moving averages there. It's just, moving its way nicely there. And that was over November to June, July. So, you're looking at sort of, an 8-month period there, okay, where on the weekly chart where that price was just operating in a trend. Remember what I was saying is that trend trading, what we want to be doing is looking at opportunities to, to buy pullbacks, right? And in downtrends, we want to be looking at opportunities to sell rallies. And that's what we're looking at here, okay? Whenever there's little bits of pullbacks, we're just looking to opportunities and ways and means to be able to buy the pullbacks to allow us to enter and engage and ride that trend, think of yourself like a surfer. You're trying to surf the biggest waves, all right? Good surfers don't try and surf every wave. All right, good surfers try and identify where the good waves are and then surf them as long as they can. And the same is true with trading. Okay, think of those good trends as like a good, it's a good wave, and you want to be able to surf it for as long as you possibly can. I recognize that sometimes is easier said than done. But if you're applying this simple price action trading plan, if you're just doing these simple things well, I assure you it will put you in the spot to be able to sort of get on board and ride those. Then, as I said, step 3 is wait to see how does price react at those key support resistance levels. What does that actually mean? How do we turn that into something actionable? You will hear me in the past and going forward, I talk an awful lot about a confluence of events, right? That's what I'm looking for. I'm looking for 2, 3, 4 things to come together at one time and place that gives me an idea that this is a place where I want to do my business. This is a place where I want to engage where markets, and it's where we start to include those, price action setups. It is, look at identifying those levels, all right? Identifying those areas. There might be a support resistance level, big round number, might be dynamic, support resistance from a moving average, right? The price action might just be, as a pullback as part of a particular uptrend, right? As I said, it's a confluence of events. That's all I'm looking for. 2, 3, 4 things coming together, one time and place, that allow me the opportunity to engage with markets, right? With a higher probability of market moving in one direction over the other. And then, once we're identifying that, we're looking at step 4, which was looking for, price action triggers at those areas. So, we've spent several weeks, we've gone through in previous sessions looking at some very simple trading setups, looking to identify them at those particular areas of interest. So, we've been through things like pin bars and engulfing candles, inside bars, all right, and key reversals. Been through things like that, all right? So just be, if you are, new to trading, don't really fully understand those setups, you'll find all of those videos on the Admirals YouTube channel. So by all means, just go in, watch them. You'll take it on board. Okay, I will really cover elements of it as we go through and look at markets. But what we want to be able to do is just to recognize, okay, when we're starting to see them. We'll look at things like, combinations of price action. We'll look at combinations of price action with moving averages. We'll look at things like 1, 2, 3 patterns, 3-bar reversals, etc. We will cover them as we go. But so far, we're focused on pin bars, engulfing candles, inside bars, key reversals, and star formations as well. So all of those elements can be added, learn them, because I'm looking to utilize them as a price action trigger within the wider context of, what I'm looking for compared to, in the, as I follow through my steps as part of the plan. Step 5 is kind of basically general chart patterns. Okay, price might be putting, giving you a trigger, but you just need to check yourself before you wreck yourself, as somebody sang many years ago. I think that was LL Cool J, but I could be wrong on that. My knowledge of popular hip hop music is not as good as it should be, but you get what I mean. Okay, namely that what we want to be able to do is we want to be able to understand, all right, general chart patterns. Okay, because price might be setting up as one of those, which either will negate your trade setup or maybe give you additional opportunities. So, you know, if we're in a good trend and we start to see continuation patterns, things like bull and bear flags, ascending and descending triangles, symmetrical triangles, wedges, etc., pennants, you know, that can actually help us. That can give us a bit of confidence, okay, give us a bit of confluence, excuse me, as to what's going on, and we can utilize that to put ourselves in the right time and place. Alternatively, okay, maybe we're in a trend, but actually price is setting up a big reversal pattern, like a head and shoulders pattern, or double top and bottoms, or a triple top and bottoms, or even something as esoteric as a cup and handle platform as well. I think it's important for these traders for all of you to know and recognize those patterns. You might not actually trade the patterns. Some people do. Some people trade them very, very well, especially on longer time frames. Okay, they tend to have a bit more validity. But, you know, it's a case of you understanding the context, recognizing what's going on in that market. And as I said, it might actually stop you from taking, you know, a poor trade, or it might just give you the confidence and the confluence, all right, that you know, the market is going to continue in the particular red direction that you're looking to trade it with, if it's giving you a continuation pattern as part of a nice trend. So, before we switch across to the charts, all right, to have a little look at what's going on in the live markets. At the last session of last year, I set the question of, you know, how do we make 2023 our best trading year ever? Those of you who joined me, you know, I set you a little exercise to do over the holiday period. I'll be interested to see how many of you did it. Okay, if you haven't, still time. All right, the video for that is on the Admirals YouTube channel. Go watch it, take it on board, do the exercise. It'll help you, you know, set yourself up for this to be a good year. But, you know, we talked about how do we make 2023 our best trading year ever? One of the simplest ways to start is with a very simple trading plan. Simple trading plan that becomes a routine that is based on a checklist. We've covered routines, we've covered checklists, all right, so far in our session. It all builds up, they all kind of complement each other, and it all comes together. And one of the things they do is it stops us taking silly, knee-jerk, impulsive trades. You know, when you're a new trader, you know, I still remember it well, you want to trade everything, okay? The market is exciting, it's a lot of flashing lights and movements and, you know, noises and stuff, and you want to be part of it, all right? But as you grow as a trader, you'll realize that, you know, there are good trades, your good trades that suit you, as opposed to knee-jerk impulsive ones that do not suit you, all right? And having a trading plan that's part of a good routine based on a checklist is the sort of thing that will stop you from taking sort of silly knee-jerk impulsive trades. That plan, all right, having a simple plan that you can follow also provides you a bit of focus, all right, focus for your time, effort, and resources. None of those things are infinite, okay? You know, everyone has limits on their time, their efforts, and their resources. So what we want to do is focus it so we can make the most of it. So if you don't have one, start to build a simple one for yourself. And today you can utilize what we've talked about here. You might make your own one, all right? Does not have to be perfect. Sometimes I find traders, they will put off doing their trading plans or trading records because they, you know, they want it to be perfect. Don't let perfection, all right, be the you know, get in the way of progress. All right, progress is more important than perfection as a trader. Just being able to move forward, you know, day by day, week by week, month by month, quarter by quarter. That is really the important element. Okay, you know, I speak as a reformed and recovering perfectionist. All right, I still have an element of that, but the reality is you have to recognize that you know progress is more important than perfection. Okay, you can, by all means, you can strive for excellence in your trading, right? But excellence is not perfection. All right, it's about being able to do the very best you can with the time, effort, and resources you have to your availability, along with the knowledge and the experience you have. And of course, that knowledge and experience is always building and expanding, especially if you're joining our Admirals webinars. So before we switch across the charts, just a reminder, don't forget to join us next Wednesday, 18th of January, for the next in Paul's Ultimate Price Action Trading. What we're going to be talking about is trading a false breakout. All right, we did a session a couple of months ago on whether we should trade bounces or breakouts. All right, and I'm going to talk about trading a false breakout. And I'll cover things like, well, what is a false breakout? Why is it a useful trading tactic? How can we trade them? So remember, that will be 2 o'clock next Wednesday, London time, all right, 1400. Check your inbox for the webinar link. We'll go onto the website and sign up for that particular session. And if you've got questions or comments or thoughts, you're watching this later, by all means, you can get in touch with Admirals as you please. Okay, there's all sorts of ways to get in touch with them. And yeah, as I said, if you'll just bear with us a moment, what we'll do is we'll switch across to the Admirals platform and just start to, as I say, start to put our plan into action as we look forward to what is going to be an eventful 2023. So just bear with us one moment and we'll switch across to the charts. Right. Let's bosh. Here we go. So I'm hoping you can still see me, hoping you hear me, hope you can actually see this, the Admirals Metatrader platform here. Excuse me. This is one that's come up here. What you can see is I'm starting to set up a profile here for price action trading series that we'll talk about. This is, remember what I was saying is that you can pick your faves, okay, and this is Facebook, all right, or Meta, all right, Meta. But I think for those of us of a certain vintage, it'll always be Facebook in our eyes. I'm fascinated by these charts. As I said, I don't consider myself an equity specialist, but in terms of looking to trade, that's what we want to be able to do. So you will see for my charts here, okay, as part of this particular webinar series, you'll see I have blue bullish candles, red bearish candles. I have a 20 period simple moving average and a red 50 period simple moving average, and also you'll see a green simple period 200 period simple moving average. And I also have, maybe you can see these little triangles. These are just simply, these are fractals. Okay, I'll do a session on fractals. If you don't know how to find them on the Admirals Metatrader platform, if you look at insert, okay, go to insert, go to indicators, go down to Bill Williams, and you'll see it there, fractals, okay, and you'll find them there, and that's how you can put them on there. So remember what I was saying is that, I'm just going to move this over the way, is that, what I'm saying is that, whenever you open a chart, all right, just start drawing your levels of support resistance, and it's quite simple. I'm just going to use the horizontal chart, and then I'm going to draw in particular levels. I'm interested in this. This is the highest that we've been here, okay? And what we can do is, I'll just put that in, but we can tidy it up as we go. All right, 425. All right, we will tidy it all up as we go down the time frames. But what I want to do is, and this is where I find fractals help me, is identifying where where there have been particular areas or zones where price has been rejected from consistently. All right, that starts to become of interest to us, and I'm just starting to draw in those particular, where I see those particular levels of interest to me. Here we go, just putting them on there. And as I go through the major time frames, just utilizing that to just effectively start to build a picture. What is of interest to me when I look at this is that, for many years, price was in an uptrend. Price was in an uptrend. It was in a very clear uptrend here. It then printed this big rejection candle, which is also, it was a rejection candle, it was a pin bar, it's a key reversal candle, and price drifted its way down to the 50 period moving average, but then it bounced off it, 3-bar reversal, and away it went until it came back down to the 50 period moving average, okay, bounced off it. Remember what I was saying is that, moving averages can act as dynamic levels of support and resistance, and this has been very clear about that, and price rallied its way strongly, didn't it? It went very, very strong until it ended, okay, back in sort of September 2021. And what did it end with? It ended with a big, what is a big bearish engulfing candle, which was also a bearish key reversal candle, right? Remember, what it needs to happen for it to be a key reversal candle is price pushes to a new high, which it did during that month, but price rolls over, falls, and it closes beneath the low of the previous candle. That is, that's telling us that that party is over. In the same way, when it did it here, pushed to new highs, but closed beneath the low, what we saw was we had 4 or 5 months, okay, of basically downtrend. What we've seen here is that was the exact top, and you can see for yourself, from having traded up as high as there is $384. Well, at the end of last year, okay, we were down to $88, and I'd lost $300 in price, and you can see for yourself that how that had moved. And key reversals, engulfing candles and stuff on equities, on monthly candles, are I find them, really quite useful trading, indicators. Very simple indicator to look at, utilize, okay, and something you can look at if you're engaged in working with equities. If I go down to the weekly chart, remember I've done monthly chart. Now what I want to do is just start to sort of tighten up on the on some of my levels of support resistance. One of the great things about the MetaTrader platform is it continues to draw it in once those levels are in. Okay, they're there. So what I'm also kind of keen on is that here at this particular area, what do you know? $299. That there's lots of fractals and moves. So in my mind, that is actually just more of a big round number. So I'll just effectively bang. That's $300, right? Big round number there. What a shock that actually price reacted a lot to the big round numbers. No surprise there. And actually what we might see is these particular levels here, they're at 196, 218. The 196 area is probably just around about that sort of 200 level as well. All right, that's that's what because we just drew it in from the monthly chart, but actually we can do that. We can do that in there, and then I'd start. Just because of the very nature of it, I'll be putting in a level at 100. All right, big round number. Right, especially on, as I said, things like equities. Okay, people. People are lazy, basically. They will just look at the big round numbers there and stuff as it is. But as I said, what we can do is we're just drawing in those levels of support resistance. Okay, getting an idea of where we're going. We looked at that monthly chart, didn't we, about how it had put in a key reversal and had been in a trend. That weekly trend it's confirming that, isn't it? It's been a very strong trend. It's coming back a little bit, all right, towards the end of last year, but the longer term dominant trend has still been down, hasn't it? So, if I go down to the daily chart, here we go. The daily chart is just showing how it's just continued. But what we're interested in here is that, we're now actually above that 50 period moving average. What you'll find is the 50 period moving average is quite a fair, people will use it as a kind of fair indicator of value, all right? And you'll find that, a lot of people will just simply trade bounces or breaks off that 50 period moving average, something we will talk about in a future session. So, what we're looking at is on the monthly and the weekly chart, we're clearly been in a very strong downtrend, but it looks like maybe on the daily chart, maybe we're getting a little bit of a change there, right, on that daily chart there. Okay, just zoomed out. But what I'd be looking at is, well, this was a particular level of support and resistance we've drawn in from a long time ago. For me, it needs to get above, every time it's reacted here in the past, here it was support, then it was resistance. Now I'd be looking at, well, does it come up to here and then bounce off it? Or does it cut through it and then basically hold above it, in which case then that becomes the kind of, let's say, the daily trend is bullish against the longer term downtrend, the longer term time frames. So, but what we'll do is in future sessions we'll come in towards things like multi time frames and understanding where should we be focusing on and how should we be operating. Some people would love to just trade the weekly charts because they can just do the analysis at the weekend. Okay, just have a look at the weekly chart and then basically put a trade on when the market opens on the Monday morning. Other people would like to sort of trade the daily chart because they think there's more action. And then, of course, there are people who like to trade even shorter time frames, all right? But, as I said, even if you're trading shorter time frames, starting off by ensuring, you're drawing in those levels of support resistance from your monthly, your weekly, your daily charts, it is important, all right? Because it will help you identify particular levels and zones in areas that, that they are those inflection points where we want to wait and see how does the price react at those particular levels to give us an opportunity. Raquel says, can you say how to highlight the big round numbers? In terms of highlighting them, well, what I would be doing is just, looking out on them. What you could do here is, you can just basically use, there's a horizontal trend line here, okay, horizontal trend line button, which is on both the MT4 and MT5 platform, and you can, let's say, just draw it in. I'm just going to put one in here, all right, and then you can right click on it, select the horizontal line properties. And what we can do is the value, let's just say we're going to put one in for we'll put one in for $100. But what I'm going to do is, because it's a big round number, okay, when I choose comment, I'm going to make it just a bit of a thicker line, okay, thicker significant line, all right. So there we go. And so hopefully you can see that there. And so I might want to do that 100, 200, 300 and 400 just to draw the eye towards where, you know, how price reacts to those big round numbers. As I said, it's you know, it's a useful technique to draw them in, because as you can see here with those fractals, all right, price clearly responded to that level at $300, the big round number. You know, whether you like it or not, you know, you're looking at how does price react to it. You know, here it's resistance, here it's resistance, here it's resistance, then it becomes support. First time it comes back down, it's support, okay, but then actually we're getting is a PO20, which is a setup we'll talk about. And then once it does break, look how it breaks, completely breaks, it goes all the way down to 200, all right, before it bounces off 200, before it breaks and goes all the way down to 100. So on things like equities, those big round numbers, those big levels of support resistance, they are important, they are crucial. Okay, so drawing them in is basically what will help build a picture of, you know, what's going on in that particular instrument, so that you're able to sort of, you know, focus your time, effort, resources on to trading that. You're very welcome. You're very welcome, Raquel. So there you go, ladies and gentlemen. Unfortunately, we have run out of time. Time flies when you're having fun. All right. I hope that has basically given you a little bit of help and a little bit of insights. You know, there's a very simple price action trading plan that can be formed the basis of, you know, a bigger plan that you can build for yourself. There's a routine, there's got a checklist element to it, all the stuff which we have talked about before, all the stuff which is covered, and you'll find it on the Admirals YouTube webinar archive. Okay, so be sure to go and check that out. As I said, after this, there'll be a little feedback form. If you take a moment just to fill in, if there's thoughts or comments or stuff you'd like to see me cover that would help you, by all means, please put them down. We'll find that very useful. I'm always open to feedback. And I hope you'll join us next Wednesday, okay, for the next session where we're going to talk about trading a false breakout. Until such time, you know, I just wish you the best of success with your own trading, ladies and gentlemen. Have a great trading week, and I'll speak to you soon. Trade well, everybody. Cheers.